Hey folks, this is Rainer here from tradingwithrainer.com. So welcome to my weekly Forex analysis for the 17th of November. So this week I have actually spotted quite a number of setups and I'd like to share them with you, right? So let's get to the charts. So this is the chart of the British Pound Yen daily chart, and you can see that price is actually in an uptrend, right? It's very obvious. See, we have a high here, retrace back, form a higher low, retrace higher, form a new swing high, and retrace and form a higher low. Alright, you can actually connect these two swing points here, and price after that consolidated between the 59 and the 56 level, meaning here is consolidation. So what happened this week was that price broke out of the resistance, right? And right now people are actually long the pound yen, right? So there's a lot of bullish momentum going for this pair. So I'm actually looking to long this pound yen, and here's how I will go about it. So this is the daily chart. I'll go down into the 4-hour chart, and what I'll do is I'll wait for price to retrace back toward this level, right? Towards the 159.50 and the 159 level, which is this region over here, right? Should price retrace back in the coming week, I'll look to long at this area and get my stops below this swing low over here. So my stop loss would be about 58 to about 59, about 100 to 120 pip stop loss, right? This would be my stop loss, right? And potential risk reward is actually quite decent, I'll say. Can actually target the swing high over here, so at least a 1 to 1.5 or even a 1 to 2 risk reward, depending on how you want to exit this trade. But this would be my area to look for longs, and this is my stop loss. Alright, the next pair I'll be looking at is the dollar Canadian. Alright, let's look at the dollar Canadian. Dollar Canadian, alright. Okay, as you can see, this pair in the last few months, what he has been doing is basically he has been ranging between the 106 level and the 1025 level. Alright, you can see here is the highs, here is the lows. Alright, and right now I actually identified a Gartley pattern. In fact, I think I'm a little late to this setup, right? But nonetheless, I'll draw the setup. I'll draw this Gartley pattern and show you how I actually do it. Right, this is the swing high to the swing low. Notice price terminated at the 618 level. Thus, we'll be looking for a Gartley pattern. Alright, so next I'll use my Fib extension tool. Alright, and I'll look for an AB equals to CD pattern. So we have the termination of the 100% level. Alright, and the last thing I'll do is just take this leg up to this leg and look for the 127 level. So as you can see, here we have a cluster of Fibonacci over here, and this is rightfully really a textbook setup where a Gartley pattern is supposed to terminate at this green zone. Alright, so I did not take this straight because I just came to this chart and noticed this Gartley pattern. But should price actually come back towards this green zone, there's actually a short opportunity, and stop loss would be above this swing high over here. So you short somewhere in this green zone and get your stops above here. Target wise is actually quite discretionary, but first thing I'll look at is actually about this swing low over here, which could be a support region. So yep, that would be this Gartley pattern that I'm looking at for the dollar Canadian. As you notice, price already came into this zone, tested a few times, and now it's actually coming down lower. So price may or may not actually come back to this green zone, and if it does not, then we'll just skip the trade. Or what could potentially happen is that price come down lower, test this mini support here, and rally up higher. So you have to be cautious about this trade also, because it's not the first time that it has come into this green zone. Right, so take note of that. And another pair I'll be looking at is the New Zealand dollar. Right, New Zealand dollar. This is the daily chart. Looking at the weekly chart, you can see that this price is also been in range between the 77 level, which is here, 77, and the 86 level. So it's about a 900 pip range, right? So it's about here, ranging here. So what is happening now is actually price seems to be forming a head and shoulder pattern. You can't really see on this weekly chart, but look at the daily chart. I can actually highlight to you the head and shoulder pattern. Right, this is the left shoulder, the head, the right shoulder, and this will be the neckline. So if this pattern will actually play out there, we can actually expect a further downside, right, and potentially touching this 77 level, which we know is a support level. So how would I go about playing this potential head and shoulder pattern? So I would not like to trade the breakout, because if price were to break down, then chances are I'll look to short, and my stop loss will actually be quite wide because I have to be above perhaps this swing high over here, which is the right shoulder. So what I rather do or prefer to do is that now we can see this bullish green candle. If price were to come back and retest this swing high over here, I'll look to short and get my stops above the head. Alright, so our stop loss would be about, I would say, from here to here. This would be your stop loss. it's about maybe a 70-80 pip stop loss, and the potential targets would actually be at here, 77. So you can see the risk reward down here, right? So one thing to take note is that if price were to test this right shoulder over here and it comes back down towards this neckline, you may want to set your stops to break even, right? Because you never know, that chances are that price may come back, test here and rally up higher. So at least get it to break even, so you're safe from this trade. But in fact, look at it now, if price were to actually retest this right shoulder again one more time, it's actually the second retest already. So it is actually a little more risky because price has tested once, bounced down, and now it's about to retest a second time. So again, do be cautious because it's not the first retest. So that will be for the New Zealand dollar. And the last thing I'll be looking at is the Aussie New Zealand dollar, which is here. So this is okay, the weekly chart, and you can see that this chart is just simply bearish, just down, down, down all the way. However, something is brewing up here in the daily chart. Sorry, you can see that price is about to form a triple bottom here. One time, two time, and now price is actually coming to test this 112 level again. But looking at the momentum on these last few candles, right, you can see it's actually quite small bodied, so it's telling us that the momentum towards the downside is actually not very strong, right? It's kind of like fading away. So for those more aggressive traders, those counter trend traders, what you can actually do is look to buy at this 112 level, right? A buy limit, and with about a 80 to 100 pip stop loss. Yep, you don't really need such a wide stop loss because it's in a downtrend, and if you're wrong, it's very obvious that you'll be wrong. So that's all you need for your stop loss. And as for targets, you can look to take profit around this resistance area here. Alright, so this will be your target. And your entry is somewhere around here. Your entry. So this is for more aggressive traders because it is a counter trend trade. So please do take note of that. And with that, that's all I have for you this week. Hope you guys are enjoying your weekend. And for those of you who actually like what I'm doing, what you can do is actually head down to my website here, and you can join me on my Facebook discussion group here. Right, sometimes I'll actually post updates on the trades I've taken, and you guys can discuss anything you want related to price section over there. So with that, I wish you good luck and good trading. Thank you.